I was looking at different banks, and Union Bank was able to look at my potential when no other banks would lend to me.
Welcome to this special edition of Hispanic Lifestyle. I'm Richard Sandoval, and we celebrate National Homeownership Month by talking with industry experts on current market conditions and how it might affect the purchase of a home. Our special guest will discuss down payment assistance programs, how to assemble a team that will assist with the purchase of your dream home, and the importance of building generational wealth. Links to our guest contact information can be found on our website, HispanicLifestyle.com, or just scan the code on your screen. But before we get started, I would like to thank our sponsor, Union Bank, for their continued support of Hispanic Lifestyle's effort to educate, inspire, and empower our communities.
With the help of Union Bank, we were able to get a mortgage
and buy a house of our dreams.
Hello, Richard. My name is Samuel Assael. I am currently a managing director and the head of our consumer markets division at Union Bank. I've been here 9 years. I've been in the industry for 20 years. Started my career at JP Morgan Chase in a call center, learning really how the ins and the outs of the business work. From there, I moved into an account executive position where I stood in San Diego for about 3 or 4 years. From there, I joined the broker wholesale channel to really learn what it was like to work with a consumer. And in 2013, I found my way back into retail here at Union Bank. Currently live in San Diego and got a 4-year-old son. Free time I usually spend with him and my wife. And that's me.
Hey, man, thanks. I mean, who doesn't love San Diego, by the way? Right. But you've got some skin in the game. You've got some years in the game. What an interesting time, and from your perspective, to be in the home ownership mortgage industry. Can you kind of give me just your overall thoughts of where we are in this, what some people describe as a volatile market?
Yeah, volatility is out there, both in housing inventory as well as the rate environment. It does change the landscape of your pre-approved buyers as rates rise. Their buying power sometimes shrinks based off what they qualify for. The nice part is we've seen an uptick in builder confidence. So we're seeing the actual direct cost of wood decrease, which is nice, allowing them to bring in lumber, build quicker, build cheaper, to create more affordable housing for our communities in our lending footprint.
Sam, I really want to approach this conversation as though you're sitting across from me on my kitchen table. Yeah. And I'm watching all these news reports that the other day the Fed raised rates. What does that mean to me as I'm filling out the application on a house, to purchase a house?
Yeah, the overnight Fed funds rate movement is, it's going to have a direct impact on the market. Great question for an economist, though, Richard. So forgive me if I kind of migrate towards more of how it would directly impact the housing side for mortgage financing. But if we were sitting there having coffee at your house or tea and just chatting about what we're seeing on the news, I would just say, I'd go back to my comment on buyer power, right? The buying power of a consumer who's out there looking to move from renting for years or decades into owning. As rates rise, it will shrink their buying power. So the consumer who's currently qualified for $350,000 with 5% down, let's just say 6 months ago, because the market moved in terms of interest rates rising, that same buyer may only qualify for $300,000 today. And what happens is they move themselves 10, 15, 20 miles away from the market in which they were searching. For example, if they were searching in Ramona, they may now need to move themselves to Temecula or Marietta. If they were searching in Marietta, they may have to go farther up into Barstow or Big Bear or Blue Jay. Now, that also has an impact on the consumer if they are not working remote. They have to be cautious of their commute time. And then also families, where they're going to put their kids in school and the education they're going to have. So renting for some may still be the only option, which is unfortunate. And I say that because I would just love to see a continued focus, right, to moving that generational wealth gap from the renter to the homeowner and watch their families grow and flourish.
People are looking to purchase. I mean, they have built up to this moment of purchasing their first home. Should they give up on that dream? Is there really, I mean, we're here in Southern California. Should we abandon our dream of purchasing our first house?
If anybody in their career gives up on a dream, I would disagree that the American dream is alive and well. Not sure if you're a sports follower or even, motivational speaker follower, right? Giving up isn't an option. And I would say to all those consumers out there that feel deflated, it's part of the process. It really is. And sometimes a deep breath and maybe taking 30 days off from finding that dream home will help revamp and restart that process for you. But my advice to anybody looking to own, whether it be today or in the future, is don't give up. Have a plan. Be comfortable with your mortgage consultant, right? Understand and make sure your realtor knows your needs, because that's key. That is going to be key to you becoming a homeowner. But don't give up. It's alive and well. I promise you that.
Now, with that said, I know that you and I had previously spoken about some of the programs that you have been involved with, specifically with Union Bank, to make homeownership a reality. Can you talk a little bit about that? I
can. So, I'm going to start off with the Union Bank proprietary grant program. We launched it 3 years ago, and we offer up to $6,000 to $9,000 in specific counties. It's a proprietary grant. It can be used for down payment or closing costs, or even to buy the rate down. And I say the buy the rate down portion because in a rising rate environment, sometimes our grant money will help buy the rate down and increase the buyer's buying power. And that's the key right there. I will say that between the grant program and then our relationship with the Federal Home Loan Bank of San Francisco, where they distribute Wish Money. Wish Money is a 4-to-1 matching grant up to $22,000. It is a recorded lien. The borrower has at least $5,500 seasoned funds of 2 months. They would qualify for that $22,000 so long as they're buying a home in a census tract, or they qualify 80% or less of the area median income. The acronym for that they use is AMI. The big key here too, though, for those homeowners is to develop a relationship with their banker and their branch partnerships and mortgage consultants early in the process. They want to be clear about their goals and then work towards that end result goal with their partnership as a team. And that's what we do. We create that team for that consumer. We introduce them to 2 or 3 realtors to ensure that they have the decisions that they can make to go out there. And again, I'll say it proudly, become a homeowner.
In your opinion, who are some of those people you should have on your team?
As a buyer?
As a buyer.
Yeah. So first and foremost, your mortgage consultant, make sure that they are in your court, understand your goals, and are on your side. Your realtor, ask too many questions. There's never enough questions you could ask of a realtor about a community, a school, safety, commute. I would say combine those 2 individuals will be your lead pillars, in my opinion. Now, during the loan buying process, you're going to also run into escrow and title once you're in escrow. But I would say to get to that finish line, the relationship with your mortgage consultant, the relationship with your realtor are going to be key. Together, if you all share the common goal of getting you the keys to your front door one day, and you're clear and concise about those, whether it be 6 days, 6 weeks, 6 months, or a year, if you stay committed to it, right, you don't give up, you will feel and find that dream will come true.
I'm going to turn the page just a little bit, and I'm going to talk about people that are in their homes now. Again, with the same thought process of having this conversation, and that is adjustable rate mortgages. If you got into something a few years back and now you're seeing the change in the interest rates, do you have some advice for those people of what they should do? I mean, should they continue to wait? Should they think about refinancing? What are your thoughts?
It's a great question. I think every homeowner has that decision of taking the lowest rate. In the last 6 to 12 months, sometimes the lowest rate with the market movement was an adjustable rate mortgage. My advice to those individuals: stay connected with your mortgage consultant. Ask questions quarterly on your refresh check-in calls. Has the market shifted? Can we lock into a 30-year at the same rate or lower? If a 30-year fixed rate is your ultimate goal for security and safety and peace of mind, I would say continue to make the payment on your ARM loan. Understand that the market continues to fluctuate, and it's up and down. It's cyclical. 3, 5, 7 years, you're up, you're down, you're up, you're down. This could be a little bit of a different market. Again, a great question for an economist to come in and provide that feedback. But I would say the number one thing I would tell the individual who took an adjustable rate mortgage is to stay in touch with your team, right? Your finance team, your mortgage consultant. And when the time is right, you collectively will agree that a refinance may be a best option to get into a longer term, a longer fixed term, or a new loan. Take some cash out, put a new roof on the home, build a swimming pool. At that stage, a loan program may be an option to go into a new ARM loan and then wait it out again 3 to 5 years. It just depends on the client's needs.
Literally just saw this on CNBC, and that is the fact that people's credit rating is the highest they've ever been on an average. People have equity in their home. What are your thoughts? I don't know that this is a great question for you, but what are your thoughts about pulling out money to make some of those purchases, home improvements, if you will? And how easy is that process?
The process, and I'll work backwards here, it's just as easy as taking out a refinance, which would be considered a home equity line of credit. I'm going to go back to that, the wellness piece, the comfortability piece. As long as you're asking the right questions about a home equity line and it's affordable and the comfort levels are there, it's not a bad product to pull out cash as a second mortgage, so long as you understand in the future, right? If you pay off your first, you may need to pay off your second as a combined loan to get a new loan. They're great. They're fantastic programs and products out there on the home equity side for individual consumers that want to tap into that equity position. In California, you've seen home prices skyrocket 15, 20%, right? And borrowers that put down 5 or 10% now have a very strong equity position. Some consumers will never touch that, right? Some consumers will say, hey, we have an opportunity to pay off all our credit debt, pay our car off, put a few bucks in the bank. And that's not a bad decision so long as the family agrees on it and you understand the product you're getting into. Again, how you do the understanding piece is ask questions. Ask questions of your mortgage consultant, family, friends, get opinions, and then you'll ultimately make that decision. But with equity positions up, Richard, hey, listen, if you've always wanted to build that dream pool and you've got a couple $100,000 in equity in the house and you want 50 grand to go build your dream pool so it's no longer vacations with the family, it's now backyard pool time with family and friends. Listen, that could be a dream come true for some families.
Before I give you your final thoughts, is there anything that we should touch on? Is there any?
Well, first off, Richard, thank you for the time. I mean that, the Hispanic Lifestyle Partnership and the amount of impressions that you have for what you've accomplished is incredible. I'm part of the NALCAB Corporate Board of Governors for the North and Southwest. I'm very involved in bridging the gap for Latinos and home ownership. We've seen the numbers skyrocket the last decade in terms of the Latino presence in the home ownership community. We're doing the exact same with the NAREB team, with the ARIA group, and just trying to make a difference. And if we do it one homeowner at a time, right, those homeowners add up from the hundreds to the thousands, and you start making an impact and people see that. And I would just say that that's the true commitment of where we're at today as an organization, is just continue to help educate and then bridge the gap, right, from that generational wealth gap to home ownership, because that's really where it starts.
Thanks again, Sam, for your time this afternoon. And I'm sure there's a way to get a hold of you. Do you have a website? Is there an email? How do I connect with you or your team in the future?
You can find us at unionbank.com, www.unionbank.com. You can navigate the system to look for a local mortgage consultant, one of our local branch partners in the states in which we have retail branches in California, Oregon, and Washington. And I look forward to helping anybody who has questions. Just find us on the website, walk into your local branch, tell them that you saw me on this video and that you have questions. And I promise you we'll get someone to call you back and sit down with you.
The Union Bank student-run branch program was focused on financial education. Today, I work as an IT project manager.
Me siento muy orgullosa de mi hija.
Thank you, Mom.
Hello, my name is Nuria Rivera. I am out of Salt Lake City, Utah. I am the owner and CEO of Novation Title Insurance Agency, and I service the whole state. I am also very honored and delighted to be president-elect for NAREP, which is the National Association of Hispanic Real Estate Professionals.
Well, it is so nice to meet you. I know that we were talking off camera and a little bit about where we are and location. And thank you so much for joining us on what is my first effort in doing a home ownership summit, if you will. And I want to start off by asking you the easiest question. What is it about this industry that you are passionate about that you decided to become a leader in the home real estate industry, if you will?
Yes, and Richard, thank you so much for having me. It's a pleasure. My passion within the real estate industry is just watching people achieve the American dream and then also create wealth. So real estate is still the #1 way to create and build wealth in America. And as Latinos, we do not have any generational wealth. And so I love that right now it's so important to be Latino, and it's so exciting. And we get to be that first generation that creates that for the future. And that just, I'm so passionate about that. So many things, but just watching people cash out on their equity, build wealth, invest, it never gets old.
Well, I want to talk a little bit about the organization, NALCAB, why it was created, why you felt out of all the other chambers of commerce and business organization that this literally was the best fit for you.
Yes, so NAREP's actually the largest business Hispanic organization out there, which is amazing. And just being a part of that is truly an honor. We have over 100 chapters, over 50,000 members, and there's just so much power behind it. So the reason I chose to be a part of this, one, the mission, we're here to advance Hispanic sustainable home ownership. And we get to do that by 3 ways. We get to help develop our real estate professionals. We also create networking experiences. And then the third part, which is a huge part and so important, is we're very involved in policy. So any economical Hispanic issues, we're at the forefront of it and really making big changes. And so the organization has not only really empowered that real estate professional, but it's also transformed into building leaders. And Gary Acosta is the co-founder and CEO of the organization. He's just such a visionary. He really thinks so forward. We're now bringing in all kinds of different avenues of the Latino community into Latitude. And, it's this big event that everyone must attend in September, but we're really bringing in just that Latino Hispanic community together and really helping build leaders and take things to the next level. We are the people that are moving this country forward. Our growth, we're buying, we're contributing, we're really helping that economic wealth. And it's become not only the main mission and the initial vision that it was made for, but it's now become just so much more. And how could I not be a part of something so exciting?
Well, on to the issue of Latino leadership. I know you guys publish various reports. It's a source of resource information for me and Hispanic lifestyle. But talk a little bit about the state of Latino home ownership here in the United States.
Yes, so I love that you bring this up. It's one of our reports that is highly anticipated. Like you say, many people report back to. We have so much data in there, and you can find this at narep.org. It is our State of Hispanic Homeownership report, and we just released it a couple of months ago. So please make sure and go look at it. But it's really just moving from year to year and finding new information of where our Latino community is going within the United States. So it's such important information. You know, we have top leaders in the industry. We have anyone who's in housing is always reverting back to this report. Like it's so important and it brings so much information, and also information of helping us in business on how to project, how to set goals so we can move forward and making sure we know where we're heading.
Was there something in this report that came as a complete surprise to you? Maybe a bit of information on where Latinos are relocating now, if you will?
Yes, it was actually fascinating to know that some of the areas that our Latinos are leaving are California, Illinois, and the Northeast region. And they're migrating towards Texas, Arizona, Tennessee, Florida. And so, it was quite interesting that where they're leaving and they're heading towards the other direction of the United States. So that was quite interesting. Another piece of it was that we're such a young demographic. We're so young. Our median age is 30. And so that was also a big surprise and almost excitement that we're so young and we're ready for homeownership. We have 40.8% of Latino adults aged 45 and younger who don't currently have a mortgage are mortgage ready. And so those are probably the three main surprising and exciting points that I found.
You know, my background is such that I was raised by a single parent, which I have mentioned before, and we lived in apartments most of my growing up years. And I don't know that home ownership was a priority growing up, but definitely as an adult, maybe that there is some kind of sense of achievement, if you will, in purchasing a home. And if you could talk a little bit about that. That's my Latino experience. Now you're in Utah. I don't share a little bit of your experience.
Yeah, I love that. So actually I immigrated to the United States in 1995 and we rented for the first few years, but I remember that very first home that my family purchased. And my parents must have gotten a really good deal because I knew how much work me and my family had to do in that home, but it was such a labor of love. And it was something so special to us being in this place that we could call our own, that we could paint the walls however we wanted to. It meant so much to me and my family, and I will never forget that. But that was my home buying experience. So I actually participated at a very young age. But actually the Hispanic homeownership, the rate has increased in 2021 to 84.4%. So 84.4% up from 2019, which was 47.5. And so it's a consistent increase. And it just goes to show you that we still very much connect to that big American dream, that we really do value that place to call our own, that serene place where we can have our familia together. That's a huge value of ours, right? Family, culture, food, music. And so it's still very much an important aspect to our community.
Well, it's interesting that you should bring that up, that the growth has increased here. I have been around for a while. I know that we have been talking about obstacles facing Latinos, whether it was down payments, whether it was cost, there was understanding of documents. Can you talk a little bit about the obstacles, sounds like Latinos were facing before, that we have overcome in our achievement of home ownership?
Yes. So we have a few different issues. The first one's the affordability crisis that we have. As you know, price points keep going up. It's obviously affecting affordability in the United States, and NARCAB is very much behind trying to find solutions for these issues. And it's a conversation that is consistent. So you're not only dealing with affordability, but the second piece of it is that institutional investors are coming in with cash, where Latinos are twice as likely to use FHA loans. And in those, you know, the process is longer. So when you have institutional investors coming in with cash offers, they're going to beat the offer. You know, it's a lot quicker. The process is just, you know, a few days versus a few weeks. And so that's really making a huge negative impact in our community. And some of these investors are, you know, hedge funds or just big, huge corporations that are coming in, and that's what they're doing. They're buying bulk properties and then, you know, flipping them or reselling them. And so there's just no way that, you know, nuestros abuelos and, you know, our tíos and people like have the opportunity to compete with such a different big corporation. It's just, it's a huge issue that we're really, really fighting for right now.
It's kind of interesting that you should bring that up. I can tell you from a personal experience that, you know, many of us here in Southern California travel a great deal to visit our families on the weekends. Why? Because we can't afford the house next door to them, to, you know, their parents, their best friends, neighborhoods that we grew up with. And so, I mean, it presents an opportunity, but the reality is that these neighborhoods are transforming.
Yes, they are. And our Latino culture loves to be very close to each other, like you mentioned, even, you know, building homes within the same lot, or, you know, that multi-family living in the same property is very much of our culture and the history of it, and that's definitely not gone away. So you're correct. It's now creating a little bit of that space, which we want to be close together.
You know, and here's a couple of questions, kind of a follow-up, and I'm not, believe me, in no way putting you on the spot, but when you talk about building wealth and creating wealth, what is it you exactly mean by that? For example, a house that maybe our parents purchased for $15,000 or $20,000. I live in Southern California. There is a good possibility that house is worth $1.5 million. That kind of money definitely changes the dynamic, the financial dynamic of a family. Can you talk about that, of what this building wealth, generational wealth will actually mean to Latino families?
Yes, we're newer, you know, in that sense of building wealth. We're financially don't have as much education around that aspect. You know, we have our Latino community who they truly believe that they want to keep working for the rest of their lives. They don't want to retire. They're like, I don't have a retirement plan. I'm just going to work forever. And that is a plan, but it might not be the best one, you know? And so we're hard workers. You know, our community also wants access to liquid, you know, cash, liquid money. And so they're investing in more things like, you know, crypto and things like that. But I feel that there's a couple of things here is we don't have the education. We're not as educated in finances as other communities have been. And so financial education is super important for us to be able to get to the next level. That's the first thing, is having that awareness, having that opportunity to learn, and investing in ourselves to, you know, to go and learn about all of these opportunities that are out there. And then just historically, and the data shows that I see people coming through my doors all the time, you know, where they're painters, Richard, they're just painting homes. That's their business. And they're buying their fourth investment home. So opportunities there, education's there, and now stepping into that, I'm seeing our people actually building wealth. And there's no way that we're going to be able to work in exchange for money to build wealth. It's got to be investing. It's got to be putting our money that it's going to grow. And the biggest way to be able to do that is still through homeownership, because one, we're going to fully enjoy it. We're going to live in the property. We're going to create our lives. We're going to have our familia coming in, celebrations, just all the memories that go into that American dream. We're also, you know, going up. Our equity is going up historically, no matter what the market's done. Even if it's gone up and down, it's gone up and down increasingly. And so it's one of the best ways to build wealth that's safer, and historically it'll continue to go. And so I'm so passionate about this. I hope people really understand the value of homeownership and how you can build wealth and give opportunity for your kids and your grandchildren of just getting into a home and be able to have opportunity for the next generation.
What might be my final question on this topic here is, I'm a business owner. You're a business owner. We have a team that we work with. We have accountants, we have lawyers, there are other professionals that we utilize in doing our job, or we work with in doing our jobs. As a homeowner, as a consumer, how do you start building that team? Do you have any insights? I know you represent real estate, but it's not just real estate people, it's real estate professionals. And then there's more than one category in your industry. So that's a long explanation of trying to get you to say, who are the other components that I should engage with when I'm getting ready to purchase my home, other than just a real estate or a realtor, if you will?
Yes, that's actually a great question. So the qualification is one of the most important things, right? So a mortgage lender, it would be the first person that I would recommend going to. And please feel free to take a look at our top 250. This report just came out actually the last few days. And so if you'd like to find someone that's great in your area, that's a trusted expert, please go and take a look at our report. And they're all over the nation, right? So, but I would recommend going to a mortgage professional so that you can see where you stand as far as the qualifications and what type of programs there are out there, because there are a lot of assisting programs for down payment assistance. There's grants. There are so many opportunities out there that people might not know about. So that would be my first step. And or if you're wanting to go and talk to a real estate professional, the same thing, go take a look at our top 250 report. And you can definitely have the conversation first with your real estate agent. But most of them will have you talk to a mortgage professional to see where you qualify in your finances.
So now I'm going to get down to the nitty gritty, the real serious stuff. Is this a good time to buy? It's all over the news. Affordability, access to mortgage financing, and of course, inventory. Is it a good time to buy, Ms. Rivera?
I would say that's so personal, but for me, being in this industry, I got in this industry when I was 22 years old. And I've been in it for 15 years. And I can say that from my personal experience and watching many people close through my doors and even seeing the shifts of the market, real estate for me and the research I've done personally from people who are way smarter than I in finances and investments, the advice I've been given is real estate is still a very safe place to put your money for the long-term gain. So you have to keep that in mind. It is a long-term investment. And so my personal opinion is absolutely, it's always a good time to buy real estate. I know that interest rates are up, but comparing them to yours, they've been at 12% before, and so you're comparing it to the very amazing market that we've had the last couple of years, where you're seeing interest rates at the threes, and that's just, we were very spoiled by that. So seeing them even at 5, 6, even 7s, it's just like people still need to move, people still need to invest, people still need to buy. So I'm not a licensed real estate professional, so please, go and talk to your professional licensed your real estate professional. But that's my personal outlook on investing in real estate.
All right, that's encouraging. Finally, congratulations on your upcoming role as president-elect of the organization. If you don't mind, can we talk a little bit about women in your industry, specifically Latinas? I read a report someplace that women actually represent more than 50% of the realtors out in my region. Are you finding the trend nationwide?
I love that question. We definitely have a lot of Latinas within our organization. And like I mentioned before, we're, the largest business Latino organization in the nation, which is so powerful. And with our top 250 report that we just released, I just have to mention that our top agent, so her name is Artemisa Boston, and she's from Minnesota. She sold 299 units. Our top 10 Latino teams is Mark Demas from Houston, Texas, with 3,198 transactions. And then our top mortgage originator is Lizzie Hofer from Phoenix, Arizona, with 1,092 transactions. And so what's exciting about this is, out of these 3 categories that I just mentioned, 2 of them are Latinas. And so it's super exciting to see that empowerment in just that example, that example that we're putting out there, that not only Latinos altogether, but also Latinas that are really contributing to our economy, to our people. These people are really creating a path for our community, and they're really fighting for our people. It's like you're having another Latino and Latina, like really having your back and fighting for you. It's such a great career, and it's such a just great place and platform to be a part of. And it just really correlates with finding Latino homeownership, which is our mission, so just how important our people are and our members, and they're just extraordinary, and they're just really paving the way for some of, maybe some younger people watching this. So this is a great career, and it creates so much opportunity. And it just really, I'll just want to remind you that anything that you desire, you can achieve. And especially in this country, I've fully taken advantage of this American dream. And I just want everyone that's watching this, that you can too.
Thank you so much for answering my emails and agreeing to be part of Hispanic Lifestyle's inaugural Home Ownership Summit. And with that said, your final thoughts, your final words.
Sure. Yeah. Thank you so much for having us be a part of this. It's truly an honor and a pleasure. And just final thoughts is homeownership is really important. We have to remember to just connect to what that means to us, and family, any Latino and Latina you talk to, family is one of the most important things for us. And so create your own space, do your research, get educated on the financial opportunities that this brings, on top of having that place to call your own. And please go to our website. We have so many resources. We have these reports. Get connected with the right expert in your state so that they're able to help you and really fight for you and really have your back. But homeownership is a beautiful process. It also is a very emotional process at times, but it's so worth it. And so again, anything that you want to achieve, you can here. And it is our duty to start having more of these money conversations. It is our duty to start telling our children, you can buy a house, you can become a millionaire. Let's start changing the narrative of what we've always heard growing up. It's our time. It's definitely our time.
I'm Eric Johnson. I'm in marketing for the California Housing Finance Agency. And what we do is we help people buy their first homes. We also do some financing of multifamily projects, apartment buildings, that sort of thing. But today, I'm here to talk about how we can help people buy their first homes. Yes, it is possible in California. I've been working for CalHFA for almost 20 years. So I've seen the ups, I've seen the downs. Actually, on a personal note, I short sold a house back in 2009. So I've gone through the pain of dealing with paperwork and bureaucracy and talking to your bank 47,000 times because they forgot this paper or they need to send this again. So I really know what people are going through. If they're having issues with their housing, we have some programs also that can help people who are worried about losing their home. So we kind of are the whole soup to nuts deal, and we want to help people out. We want to help people get in their first homes.
I don't want to be flippant about it, but is it really possible, given the current conditions, to actually get into a first home, your first home? What is the income levels? I'm giving you a lot to unpack here, but
Yeah.
Does it depend on where in the state of California you would like to live? How are all these factors working together?
There's so much going into what's going on in housing right now, Richard. But I mean, to get down to the media question, yes, it is possible. Is it easy? That's a different question. And a lot does depend on geography. If you're looking to buy your first home in the heart of the Mission in San Francisco, it's probably not going to happen. If you're looking for a place in Modesto, if you're looking for a place in Sacramento, Sacramento is a great market right now for first-time home buyers. If you're looking for someplace in the North State, mostly places inland. If you're trying to buy a place on the coast, it's going to be harder. It's doable. It's going to take a little more bargaining, a little more work, and a lot of patience. I think that's really what people need to know right now is that it's going to take patience to get your first home, whether it is on the front end, working with a qualified lender who really knows what they're doing, working with a good real estate agent who really knows their business, and then making sure your paperwork is squared away, getting your offer in. There's a good chance you'll get your first, second, third, fourth, fifth, sixth choice house. But you got to stick with it. And it is possible. And I don't know if this is the right time to talk about our programs, how you want to lead into that. What more, if you want to hear some more about what's going on, what's your pleasure, Richard?
Well, and that was kind of an interesting question, is that explain more about your agency. Do I go there and I apply for a loan, or do you work with one of my local mortgage people, the mortgage person of my choice, somebody I've been working with for a few months?
Sure. We have dozens of approved lenders. We work in every county in the state, and we have a list of about 70 or 80 preferred loan officers, and they also can work wherever you are in the state. The nice thing about the internet these days, you don't need to have a loan officer that's close to you. You can meet with people over Zoom, over the phone, or you can go to the office if you want some face-to-face. But we have people who have done a lot of our loans. They know the programs. They know the barriers that first-time homebuyers face. The biggest barrier we've found is the down payment. A lot of private banks are going to want 20% down, and a down payment is the money you have to pay in cash upfront to just kind of start the process and get the loan. But what we do is we offer loans, and we can help you out with sometimes you get 100% financing. We can, for the first mortgage, we can go to about 97% of the first mortgage. And then for that extra 3%, it's called a down payment second mortgage. And what is a junior loan? What that means is you don't have to pay any money on that first loan. So let me give you some of the numbers because that'll make it a little more easy to understand. Say you're trying to buy a $300,000 house, for example, because that's a nice, easy number. A normal bank, 20% of that, a bank is going to want you to put $60,000 down in front so that you have a first mortgage of $240,000. What we're saying is we want you to put down $9,000 up front, but we will also loan you that $9,000. You don't have to make payments on that $9,000 until the life of the first loan. So what we're doing is we're making it much easier for people who have that steady job, people who can make that monthly payment. There are some places in California where rent is higher than an equivalent sized home. And we want people to be able to get over that hurdle. And just because you don't have $40,000, $50,000 lying in the bank, that doesn't mean you're not a good payer. That doesn't mean you're a responsible borrower. And we want to reach those people who are responsible borrowers who can make that monthly payment, but don't necessarily have that 5 digits just sitting around in their bank. You got to buy groceries, you got to buy toilet paper, you got to buy gas.
So with that said, I mean, these are great programs, and I don't know that I want to take this out of context, but I've been around for a while. I remember talking to a real estate agent one time on one of the conferences that we produced, and they talked about 7 layers of financing that had to happen right before the close of escrow. Will you take me through that process, if you will, so I have an expectations of how long this process may take when I'm purchasing my home?
Well, not to malign your friend, the real estate officer, but I think they may have been misinformed. Right now, the turn time for applications in our office is 1 day. We get an application in from a loan officer. So what happens is if you want to buy a home, you talk to one of our preferred loan officers. They look at your finances, figure out how much loan you can qualify, how much loan you can qualify for. They look at your finance, say, okay, well, you make this much a month. That means that you can afford a home that costs this much. And they're going to look at that, then fill out the paperwork. They send us the application to make sure you meet. We have income limits on our for our programs, and they vary by county. For instance, in the Bay Area, income limits are above $180,000. In Sacramento, I think it's north of $160,000, which means the person who's applying for the loan can make up that money. So it's not just loans for low-income people; it's loan for moderate-income people also. And we check your loan to make sure you meet our credit score minimums, which is 660 or 680, depending on the program. Make sure you meet our the income limits, and we turn right back around and get it back to the lender. It takes us 1 day to do our part of the loan. We really want to make sure we know that, especially in this environment, a quick turnaround is super important for the real estate agents, super important for the home buyers, because people want to get their home done. It's a hot market. It's a seller's market. So if you can come in, tell people I'm going to get it done, lickety split, then people are more inclined to deal with you.
I'm glad we're talking. I really am, because a lot of people are concerned about, number one, affordability.
Yeah.
Inventory. And, it's kind of one of those things. And then, of course, the access to capital. In this case, it's mortgage.
Right.
And so it is really heartwarming to hear that 1 day turnaround. Now, with that 1 day turnaround, does that tell you where you are? Are there additional programs, additional efforts that you need to go through? I know some programs ask you to sit through a couple of loan programs so you get a certificate that would help you in your homeowner education. Is that part of your process as well?
Right now, we require that everybody go through a 6-hour online homeownership course through our partner eHome. But since now is June, it's homeownership month, we are waiving the usual $99 fee. So if you go to the website you see on your screen, then you can get that 6-hour course, do it online, and get it out of the way for free.
Are there any other insights that you can give first-time home buyers here in California?
Well, yes, there's also programs at the local level. You were talking about different layers of financing, and I see that to mean you get help with your down payment, your closing costs, your whatever other costs are. There's other programs you can layer on to make it more affordable. We just launched a program called the Forgivable Equity Builder Program, and this is for people who are on the lower end of the economic spectrum. And for instance, in the Central Valley, Income limits are around $70,000. If you go to the Bay Area, income limits for this program are, around $100,000. And what this does, this program can give, it's a grant, and it's up to 10% of the purchase price of the home as a grant if you stay in the home for 5 years. So again, if you buy a home for $300,000, we will give you a grant of $30,000, which means your mortgage is only $270,000. And then if you stay in the home for 5 years, that $30,000 is forgiven. You never have to pay it back. We've had a lot of success with that program so far in Sacramento, lots of loans in Contra Costa, some stuff down in Southern California, in Bakersfield. So that'd be worth checking it out. Again, all this information is on our website at calhfa.ca.gov. You can check that out, look at a list of our preferred loan officers, make some calls, see if you think it would make sense for you.
So my next question happens to be is that we're watching this economy. We're coming out of COVID, the numbers go up. I mean, really, I don't know it's fair to say that we're on stable ground here as far as the economy goes. What if a year from now you're starting to have trouble with your home loan, especially with your agency and such? Are there other programs that can help me during these tough times?
Certainly, there's programs right now for people who are having challenges with their mortgage. We just launched a program to help people who are a little backwards on their property taxes, because people, I know, for some type of people refer to pay the mortgage over their property tax. It's called the Mortgage Relief Program, and it's a federal program, and we've been given $1 billion from the federal government to help people who are behind on their mortgages due to COVID. This program can give you up to $80,000 to bring your mortgage back current, and up to $20,000 to help you out with your property taxes. You can look at that at camortgagerelief.com, and that's, or maybe it's, I'm not sure if it's .com or .org, Richard, off the top of my head.
Okay.
But you can go to our CA Mortgage Relief website, and it's all online applications. Podemos aceptar aplicaciones en español también. So we have lots of ways to help people out.
Talk a little bit about programs and having a long-term view of home ownership.
Yeah, it is tough to say what the future holds. As we've seen, nobody knows what's going to happen with the stock market. Nobody really knows what's going on with housing. I mean, the one thing that, I can say is there's a shortage of housing in California. There is not enough homes for the number of people who live here and want to live here. So it's a structural thing right now. And one of the things that California is really trying to do is incentivize cities to build more homes. Whether it's, apartments, condos. We have a program to help people build accessory dwelling units, a granny unit in their backyard. We have a grant of up to $40,000 to help build an accessory dwelling unit for a grandma or a kid coming back from college, or if you want to, do a long-term rental for extra income to help you out making your first mortgage, you can do that too. That's another great program that we have. From a long-term, it's really hard to say. And as you say, when you talk to real estate agents, they don't have a crystal ball either, and they're the true professionals about the housing market. Trying to make a prediction is really challenging. But again, if you feel like you're ready to look at buying a home, one of the things I can also really recommend is talk to a HUD-approved housing counselor. There are hundreds of them throughout the state, and we've been working with a lot of them to help people. Not only are people going to housing counselors if they're having trouble with their mortgage, trouble paying their rent, but they're also going through the housing counseling agencies to get them ready for homeownership. And these counseling agencies can help you out, figure out, okay, you need to get your credit to here. You need to start saving X dollars per month. And they can really give you some concrete steps so you can get to the point where you can actually really look at one of our programs.
Well, great. Eric, I really appreciate you spending time with us this afternoon. I know we just scratched the surface on this subject. And with that said, I'd like to give you the final words, some maybe final thoughts that you have to share with our viewers.
Sure. It can be dispiriting to see the newspapers. It can be dispiriting to read about people who put in 20 offers on the home. But it can be done. We've already done about 46 loans in Sacramento, just in Sacramento, for this Forgivable Equity Builder program. We did 7,600 loans to first-time home buyers last fiscal year. So it's possible and it is doable. And what I tell people is you really got to get yourself a good team. Find yourself a really solid loan officer or broker who works with first-time home buyers, who knows the ropes. Find yourself a good real estate agent who's going to find you homes that are reasonable for you. You don't want somebody who's taking you to big mansions, that sort of thing. So make sure you have a really good team. Do your homework, put in the time, and it can be done.
My name is Marla Bilonick. I'm the president and CEO of the National Association for Latino Community Asset Builders, also known as NALCAB.
I discovered your organization online, Marla, and I'm just like blown away. So if you would educate me and our viewers on exactly what is it your organization does in the community.
Absolutely. So NALCAB is a membership organization, but we're so much more than that. We've got around 170 members that are Latino-led, Latino-focused, community-based nonprofits that are operating in the economic development space, all with the aim of building assets and advancing economic mobility for Latinos. So building assets, it's very broad. Really what we're helping organizations to do is support their communities in either becoming homeowners, becoming small business owners, and improving their financial station through financial capability interventions.
So I'm not going to put you on the spot, but are you one of those organizations that, hey, I think about starting a business, or I'm thinking about purchasing a house, and I know that there's all kinds of organizations that can go out there and help me. Would you guys be one of those organizations? And if so, tell me how I get the conversation dialogue started with one of your member organizations.
Absolutely. So I'm really glad that you pointed out that distinction, because we are one step removed. Our members are the organizations that are on the ground, entrenched in communities where you could walk in and say, I'm interested in purchasing a home, sort of what's my first step, or I want to start a small business, not sure what I need to do first to get that going. We are sort of, our clients are the very organizations that provide those services. So we're working to help grow those organizations. We invest in those organizations so that they can do more of what they do and do it in a more robust way. So someone who wanted to purchase a home or start a business wouldn't necessarily walk through our doors, but they could walk, into one of our 170 members' doors for those purposes.
So with that said, our conversation today is going to be about home ownership, and specifically our Latino community. You read the same news feeds that I do. It is an extremely volatile market. And quite honestly, I have two parts of the question for you. I've asked this of others that are participating in the program. Why is it important for Latinos to own their own home?
Well, the reason is important for Latinos as well as really for anyone. The idea is that this is a way to build wealth, to invest in yourself, invest in your family, have an asset that you can hand down to future generations. This has kind of been the cornerstone of how the wealthy, elite of our country have built up their wealth by investing in either real estate or, in the stock market. This is sort of a way, an entry point for Latinos and really for anyone to build that wealth and start, rather than paying rent, paying into a mortgage that can ultimately be leveraged for investing in something else or passing down to future generations, or even liquidating for another investment. So it's really provides a flexibility and a leverage point that few other investments would offer.
And with that said, we spoke off camera about the fact that there are 1 in 5 Latinos, 1 in 5 Americans are Latino or have part of it. And so when you talk about lifting up economies, just project forward of what this actually means for the future of America.
Absolutely. I think something interesting to note is that the Latino market has actually been the fastest growing segment of homeowners. So even through the pandemic, Latinos were in a 7-year path of increased homeownership year over year, even through the pandemic. So I think that says a lot. I'm sure I'm preaching to the choir here to let you know that, we Latinos are hard workers. We, are working around the clock, and we want to put that money into something that will benefit our families. And so I don't think it's surprising that that trend occurred, and that it continued even through one of the darkest periods of our economy. But that being said, the current market climate is threatening that. And so, and that's really for anyone who's interested in purchasing a home. The inventory is low, the prices are sky high, interest rates are going up. It's just not the most conducive conditions for purchasing a home. And so that really threatens the growth that the Latino community has had in this space, not to mention everything that goes around, growing cities, displacement, gentrification. There are just a lot of threats, not only to homeownership, but also to just affordable housing in general.
You stepped right into the topic I want to discuss in the volatility of this market. What is there, in fact, any hope? I know you're a national organization. I physically live here in Southern California. Mm-hmm. I don't need to tell you how hot this market is. And Latinos are a major part of this economy. Are there other parts of the nation that, quite frankly, that I don't know that I want to call them hotspots, but I'm just so focused in on California. There's got to be other places of opportunity throughout the United States that maybe your feeder organizations are telling you about.
Yeah, absolutely. So, I'm speaking to you from Washington, which is equally, a very high pressure market, very, sort of overinflated housing prices. And we have members all across the United States. There are certainly sort of more rural areas that tend to be more affordable. But that being said, I think another sort of angle to take a look at is that even for our community members that are in these markets where, the prices are just sky high and totally unapproachable for really most people, period. I think another thing to think about is just the fact that affordable rent is an asset. So if you are able to secure a rent that is a reasonable rent, that may give you some flexibility to save, that may give you some flexibility to actually invest in something that you might personally not live in, but that you could rent out. Or, I know of individuals just even, sort of within my network that are purchasing homes in other markets that they are renting out or redeveloping and renting out. Because just purchasing where we live or in really any urban market in the States right now is just not an option. So, what we really care the most about is affordable housing. So whether that's home purchase or, the ability to live comfortably and not overextend yourself financially in a rental situation.
Investing in companies that are committed to building affordable housing part of your mission as well too? Do you have grants and funding opportunities? Can you talk a little bit about that?
Absolutely. So NALCAB provides capital to our membership organizations, and that comes in two forms. One is in just liquid capital for small business loan funds. The other is participating in affordable housing development projects. So we have members that are nonprofit affordable housing developers, and we participate in what is called the capital stack, which is basically just the various layers of capital that come in from different investors. So we absolutely do participate in that. We also have a fund that is dedicated to affordable housing development. It's called the Catalyst Fund. And through that, we have ourselves purchased properties that we either rehab or resell, but all in the vein of maintaining affordability of housing.
And again, I'm going to get a little off track here. Sure. So if just maybe it's not in the cards for me to purchase the house that I want to in the neighborhood or the community or the city I want to live in, but I've been percolating on this business idea. What is your advice? Do you have some advice and insights of really looking as somebody that's encouraging people to build assets to make a decision on?
Definitely. So, I'm glad that you brought this up because small business is actually my technical area of expertise. And what I didn't mention is that I used to lead a member organization that is a member of NALCAB. So I have been a client of NALCAB and now leading the organization, but The organization that I was leading before did have a focus on small business development and what I had done in my career up to that as well. And I really view entrepreneurship and small business development as an avenue for building assets, for increasing wealth, particularly because entry-level positions these days are really not going to be providing sufficient support to support a family, to build savings, to invest in anything, whether that's a business or a home or what have you. And so what I've found, in terms of harnessing the creativity, the hardworking nature of us Latinos, is that entrepreneurship is an incredible pathway to building wealth. It's really creating that opportunity for yourself and for your family and for community members that you'll ultimately hire, that is outside of that traditional employment box. And I think it just has so much more potential in terms of building wealth, a nest egg, something that you can use to invest. It really exceeds what I view out there in the job market.
And the most important part, it provides a legacy for your family as well, like especially if the children decide to join the business and take it to the next level. I'm going to put you on the spot again.
Okay.
Hotspots. I don't know that you gave me a specific region or area within the United States that maybe we don't think is a traditional area of opportunity for Latinos. Everybody thinks about California, New York, Texas.
Yes.
Are there something on your radar you could give me some insights on?
Yeah, I would just say, you'd be surprised where there are emerging Latino communities. So, we have members in North Dakota, we have members in Kansas, we have, so there are Latino communities in just about any state that you can think of. We've got 3 states where we don't currently have coverage. One of those is Maine, which I think, wouldn't be a giant surprise.
I'm sorry, are there any Latinos in Maine? Because I never thought about that one. But
well, I'm sure there are, but maybe not enough to have generated, an organization to serve them yet. So, so our members are all organizations that have been, built to serve the Latino community. And so they sort of come after the community has established itself. But really everywhere, all points between East and West Coast, North and South, we have members in Alaska, Hawaii, so our communities are vibrant. As you said, 1 in 5 Americans are Latino. So we're everywhere. Of course, there are concentrations in the places that you think of: Texas, California, Florida, New York, but really every state has kind of a burgeoning Latino population. And so I think, in terms of hotspots, I don't know if you're talking about affordability of housing. I don't know that there are too many.
I was just surprised in one of my conversations with one of our colleagues. Hey, they mentioned, of course, places like Idaho, Utah, just some other areas that you thought were kind of off the map. And, so I was just curious if there was, Kansas City or Midwest. I encourage some of our friends to really look at that. If you're creating that new chapter in your life and looking for opportunities, the Midwest really is. I want to finish up by some encouraging words from you, but as usual, I really appreciate you being a part of our program today, making the time, and please share with us your final thoughts, maybe some words of wisdom, maybe some advice, and you have the mic.
Absolutely. I have had the privilege of dedicating my career to supporting the development of assets in the Latino community, both here in the US and internationally. And I am so inspired by what our community is capable of and how brilliantly we shine in this country and everywhere where we plant our feet. And so I think, if anything, I just encourage folks to explore how they can invest in themselves. Really, building an asset is an investment in yourself. It's an investment in your family. Ultimately, it's an investment in your community. And so I can't think of a better way to, take pride in our Latinidad than to invest in ourselves. So that's really sort of what I think is what keeps me going every day and what inspires me and what I think the huge opportunity is for our community in this nation.
Hello, my name is Jennifer Rodriguez, and I am with Credit.org. I am the Education and Outreach Coordinator, and I provide financial and homebuyer webinars, orientations, and workshops. And I'm also a HUD-approved housing counselor. I've been doing both counseling and education for going on 17 years now.
Jennifer, if you would, I know Credit.org has been around for a while, but could you give me a brief background of the organization and its services?
Sure. So we've been around since 1974, and we originally started as a CCCS. So we were the CCCS of the Inland Empire, and from there we outgrew our local footprint into a national entity. So we then switched over to our name that was Springboard. And then from there, we just recently, I'm going to say maybe about 6 years ago, we moved to our new name. We rebranded as Credit.org, which is our website. So now it's very easy for everyone to find us. But yeah, we've been around for quite some time serving the community. And not only are we a nonprofit, but we're a HUD-approved housing counseling agency. So we offer a lot of information in regards to personal finances, housing. We do confidential credit counseling. And then also on our website, we do have a lot of, free tools and materials that are available to the general public.
Some of the featured speakers and guests on our home ownership summit that we're producing have mentioned about HUD approved counselors. Can you tell me specifically what that means and what I can expect when I give you guys a call?
So for the HUD approved counseling services that we offer, so basically anything related to housing, if we're, let's say we have someone that is looking to, purchase their first home and they need a little bit of guidance. We do have pre-purchase counseling sessions, and those I think are very, they're very unique to the individual because they're learning more about their own financial condition and situation, and it also helps them see a little better how to reach their housing goals. And so the coaches are there to kind of help them through the process of understanding their finances, and also looking at available options that they may have to either be able to improve their financial condition. So whether it is, give them, information on their credit and how to improve their credit, or going through their budget. So they'll have a very thorough review of their expenses, of their income, all of their budget, and the counselor will go ahead and give them recommendations. Walk them through, again, the available options that they may have available. And then at the end of the session, they do create a client action plan, which is really nice because then that helps the client, accomplish those objectives. And not only is it just, like a to-do list per se, but there's a lot more information that goes along with that. There are referrals and also any type of resources that we could provide the clients. So they could, get to their goal of achieving, buying their new house, whatever the case is. We also do a comparative analysis, which is really nice. So, the coach or the counselor gets to talk to the individual, and they look at the financial situation they're in, and, their assets and their credit, and they're able to see, renting versus owning. Am I still, going to be renting for a little bit so I could be better prepared later on, or am I ready to buy? Can I take that big step now, that leap into purchasing? So I think that brings a lot of clarity to a consumer, especially when they're looking to make such a large purchase like it is, purchasing a home and getting into a loan that's, 15, 20, 30 years. So making those decisions, right from the get-go, I really do think having, that one-on-one with the coach, with the counselor from a HUD-approved agency is gold.
You got me thinking, of course, on this subject, but, we are right now in the middle of a very volatile time in our economy. People are spending over $100 just to fill up their gas tank. Food is on the rise, all these other factors as a result maybe of the pandemic and the current economic conditions. that's really affecting households. Can you talk a little bit about what it is you're telling your clients about how to budget? Maybe even give us some budgeting tips. I'm really interested in this kind of insights.
Yeah, and you know what? You bring up a really interesting point here, because even though consumers get into habits of spending, they definitely do take into consideration what's happening with the economy. And not to say that they're doing it now, but I mean, I think we've all kind of been doing it. We're trying to be very wise with our money. Now it's not only just being wise, but trying to stretch it as much as possible, right? So it's a real concern. And one of the things that I always say is, if you have a budget, a lot of us do have our budgets up here, and we already have a lot going on up here. Having a budget, on paper, writing it down, I think is very important. I'll say that, and I'll give testimony to that, because, when I first started working with credit.org, which again was 17 years ago, I thought I pretty much had my finances all figured out. And I had some debt that I had to take care of. And the one way I was able to get myself out of debt, which for any individual could be either getting themselves out of debt, saving for an emergency, because we already know over 50% of Americans don't have not even $400 in a savings account for an emergency. So either putting money aside for savings or saving for a down payment, whatever the reason is. I always recommend this. I think tracking your expenses is going to be very, very important. And it was important for me because I realized, and if I say this, I know I'm probably going to get people to say, okay, I probably did this too, or I'm doing this too. I was spending over $300 a month on something that I had not categorized in my expenses. So for example, I knew how much I was spending for rent. I knew how much I was spending for groceries, gas, all of the good things. But there's this one leak that I had in my budget that I hadn't, realized I had. And I was spending over $300 a month on coffee. And I don't want to say who it was. It starts with, sounds like star and ends with bugs. But, and it was funny because I was sharing this testimony, and one of my colleagues asked me, of course, in front of everyone, how long did it take you before you figured this leak out? And I said, I think it was about 5 years. And so, of course, he was kind enough to whip out his phone and start calculating. And it was over $21,000. Had I known I had that leak, which was very unnecessary, I would have been out of debt and had plenty of money in savings. So, for this time, I think tracking your expenses, following your money, following your pennies, is going to make a big difference. So I think that's going to be my biggest tip. Follow your expenses, your money, and any unnecessary purchases or expenses. Just pinch them or cancel them together or all together, and I think that's going to be a huge difference, especially if you have particular goals, whether it's just getting through the month, because again, a lot of families are doing that, or maybe have wanting to get out of debt, or maybe have some money set aside for emergency savings. I think that's one of the really great tips I could offer anyone when it comes to budgeting.
Now, I know you're the expert in this field, so I'm not trying to be argumentative, but what is the balance between something that you enjoy, something you really enjoy, in this case, it was coffee, and living the best life you can, and balancing that off with, I guess it comes down to priorities.
That's exactly what I was going to say right now. When you started asking me this question, I was thinking it comes down to priorities. Priorities, and it comes down to discipline too, because you could have priorities and you could have goals. And if you aren't set in taking extra steps, whether it is reducing expenses, or, looking for ways to increase your income, if you're not willing to take those extra steps, it's going to be very difficult for you to accomplish, those financial goals, whether it be, financial freedom or a peace of mind, financial peace of mind, where that, if you're sick or if you lose your job, or if something happens, in the family where you have to take time off, that that your bills are going to be covered from top to bottom. So if that is a priority for you, if it's important for your family to be safe, for you to have, a sound mind and have financial peace in your heart, I think it comes down to priorities. So I would sacrifice that coffee, which I did. And I remember I went to Smart and Final, and I bought myself some paper cups, and I made my coffee every week, and I only treated myself. I did treat myself my coffee once I got paid. So every 2 weeks, I would go and get one coffee, and that was pretty much it. So you can make those adjustments.
I love it. I'm actually here on your website right now, and it's really interesting that you focus in on three major topics here. Building your credit, which is important. It really is important. Unfortunately, we live in a society where, you know what, you may need to buy a piece of equipment, you might need to buy a vehicle, you might need to do all kinds of things to actually increase your own income. So that get out of debt, because of course, you know, once you get some credit, some people are disciplined and some people aren't. And then you get to that other stage in your life where you want to buy a home, purchase a home, and then keep a home. And I would like to talk a little bit about that. Some of your services in that area for those of us that are struggling in one way or another to make our house payment. Can you talk about those types of services and counseling services you offer?
Absolutely. So, I mean, when it comes to anything related to housing, you know, I think that is a very tough topic to talk about right now, just because housing is so expensive, right? So if you're trying to get into housing, and especially with rates going up, I could understand how credit is very important, because of course the extra steps you could take to improve your credit and improve your credit score, you know, that could help you look a little bit more appealing to the lender, where you could possibly get, you know, a better interest rate. So that's a good start already. If you're already a homeowner and you are maybe struggling with your mortgage for whatever reason, because there's so many hardships, and especially with the pandemic, even though we might say, you know, we're kind of coming out of it financially, there's so many things that people struggled with: late payments, you know, collections because of, you know, certain expenses that they just couldn't cover during the pandemic. Those things, they carry on to, you know, years and years and years. And so if there are individuals right now that are struggling making their mortgage payments, we do have foreclosure prevention counseling that definitely assists homeowners in opening up those lines of communication and working directly with their lender to be able to, you know, look at options to keep their home and stay in their home. There's also, you know, state programs that offer assistance. And so if you talk to a housing counselor, they could let you know if you're eligible, or if you know, whatever requirements you need to meet, they'll let you know what those are, to, you know, see what options are out there for you. So I think it's very important for an individual who is struggling to contact a HUD-approved housing counseling agency for any type of services related to housing, especially foreclosure prevention.
Well, great. Hey, I really appreciate all the time that you've spent with us this afternoon. And I want to clarify a couple of things, and that is the cost of your services. And do you speak more than one language? I know we're featuring this on Hispanic Lifestyle, and I kind of know that you do speak Spanish, but are there other languages that you guys offer services in as well?
Well, yes, I'm bilingual, so I'm fluent in both English and Spanish. But, you know, whatever our callers or clients, whatever their preferred language is, we do have services to cater to them. So, you know, don't be afraid to reach out to us because you feel like maybe we are not going to be able to assist you because of, you know, any type of barriers that we have with language. We could actually help with that. So that wouldn't be an issue at all.
And the cost of your services?
Thank you for the cost of the services. A lot of the services that we offer are free, and some of them do have a fee, but it's a very minimal fee. So, you know, if you're maybe looking for assistance with foreclosure prevention, like we mentioned, you know, that is a free service that we provide. Also, when it comes to, you know, if you're looking to purchase a home and you want some type of guidance and assistance before you actually, you know, jump in, our pre-purchase counseling is also free. So I would definitely say go onto our website and, you know, look at our information there. But like I said, a lot of our services are free or low cost.
I love it. Again, Jennifer, thank you so much for spending time with us. And as usual, I'd like to share this platform with you to go ahead and give us your final thoughts with our audience today.
Sure. Well, one of the things that I did want to put out there is if for those individuals that are maybe listening today that are homeowners and are either struggling with their mortgage or, are afraid that they might kind of run into some financial hardship, sometime in the future. We do have a number that I do want to share with everyone. So if you want to call us and, get some type of counseling for foreclosure prevention, we could help you with that. And the number is 833-263-2366. And so again, you can call there for our services. Other than that, as a whole, I think when it comes to finances, sometimes even culturally, I'll say this, we have been taught not to communicate about our money, right? And I would really like this, and thank you for lending us this platform to kind of share this information, because I would really like this to be something that we always talk about, that we are open about our finances, and I'm saying open the lines of communication, starting with our creditors and our lenders. And ask all the questions we need to ask to fully understand what type of loan we're getting, how to improve our credit, the tips we need to improve our budget, all these little things that are going to help us, have a more successful financial future for us and for our family. I think those are a good thing. So don't stop asking questions, open up the lines of communication, and have that relationship with your money, because that, again, the relationship with your money is going to be the longest relationship you ever have in your lifetime. So might as well, get along with it.
My name is Paul Granillo. I'm the president and CEO of the Inland Empire Economic Partnership. And the partnership brings together the large employers of Riverside and San Bernardino counties, both in the private and public sector. And so we're focused on the quality of life of the Inland Empire, Riverside, and San Bernardino counties, and making sure that people have jobs and economic opportunity.
What was it about, taking a leadership role, representing the region? What was the passion that you found in that?
When I was born in 1968, there were 900,000 people in the two counties. Today, there's 4.6 million and growing. And so I have a great passion for this region, and I know it. My first career in ministry, I was able to travel to every corner of Riverside and San Bernardino County. So I know what the North Shore of the Salton Sea and Mecca is like, what that community is like, what the community of Barstow is like, the different communities that make up a city the size of San Bernardino or a city the size of Riverside. I can remember when Moreno Valley was Sunnymead, okay? And if we were driving on the 91 freeway and we passed the Tyler Mall, right? We got really excited because there was really only a couple reasons to go out there, because that you were either going to the beach, going to Disneyland, Knott's Berry Farm, or the Angel Game, right? There was no city of Yorba Linda or Anaheim Hill.
The reasons why people located out here, and I can tell you the reason why I located out there, is the affordable housing. I was born in Los Angeles and I grew up in San Francisco, and the house in Moreno Valley was $90,000 and it was on a huge lot. So like many of us who relocated out in this region, it was because of the affordable housing and the quality of life. And can you talk a little bit about that with me, Paul?
Going back to my family, when my parents bought their first home in Redlands, like a good Mexican-American family a couple blocks away from my grandparents, right? They paid $15,000 for that house, okay? Today, that house is valued at somewhere between $550,000 and $600,000. That has always been a reality of the economy of the Inland Empire, is affordability, and that has that's changed post-COVID. We see some of the highest housing prices that the Inland Empire has ever seen. Again, around $600,000 average in Riverside County, 550 average in San Bernardino County. And, this is a 3-bedroom, 2-bath house, right? Now, the problem or the opportunity has always been that if you pick that house up, like the Wizard of Oz, and you move it to Irvine, that house is worth $1.5 million. While we have many older communities, we also have some, brand new communities that are growing. And so, we're talking about brand new houses and brand new amenities. And so people are choosing and have chosen for a long time. This is nothing new. Migration into the Inland Empire has always been a thing. And many people don't know that the government breaks down regions of the United States into metropolitan statistical areas, MSAs. Well, our MSA, which is known as Riverside, San Bernardino, Ontario, just passed San Francisco to be the 12th largest metropolitan statistical area out of 390 in the United States. The problem for us is because we don't have that big city, that center, it's often hard for us to tell our story. And that's a lot of the work that I do, trying to tell the story of this place and why we all choose to live here.
Latinos represent a majority of this region's population. Are they also the majority homeowners in this region? It's a question I don't know the answer to, but I definitely know that there's a lot of Latino families investing in homes. So I don't know where we are in proportion to home ownership in the region.
Sure. So I think it's important for us to focus on the Latino population of our region. So depending on how you break up Greater Houston, the Inland Empire has the 5th largest Latino population in the United States. And that's behind Los Angeles, New York, Chicago, Miami, and then Greater Houston and us. And so of regions of over 1 million people, the Inland Empire has the lowest baccalaureate attainment in the nation, of regions of over 1 million people, the lowest baccalaureate attainment. So of our 4.6 million people, 21% have a baccalaureate degree. In the Latino population, which is half the population, that number drops to 9%, all right? And so what you have is an incredibly hardworking population, but not well educated. And so that means that you have to work harder to afford a house. And we just talked about housing affordability rising in our region. And I think that we are probably underpopulated this is an issue for us of generational wealth. Okay. If you can get a house, right, then you can borrow on the house, and maybe you borrow on the house to help support your entrepreneurial business, right? And the Latino community is very entrepreneurial, as you know, Richard.
As usual, I'd like to give you the final word, if you will, on this subject, and any thoughts that you'd like to share with us.
Sure. I think that this is Hispanic lifestyle, and I know a lot of people who aren't Hispanic watch it, but for the Latino community, home ownership should be a priority for every family. This issue of generational wealth, incredibly important. I think that the financial institutions that are a part of IEP, are very much trying to make sure that they're a part of bettering people's lives, right? By being able to loan money, and also opportunities for your family down the line. So I appreciate the opportunity to be part of this conversation.
Now, clearly, we have just scratched the surface on the subject of building wealth through home ownership. Hispanic Lifestyle is already planning our next edition. So please follow us on your favorite social media platform, or visit our website, HispanicLifestyle.com, for more details. Again, thank you for joining us, and remember to stay safe and healthy. I look forward to connecting with you soon. Bye for now.